Good afternoon, everybody. How are you? Hope you are doing good. Hope you had a good lunch. So, let us continue with this wonderful chapter investment accounting. We'll quickly revise valuation of investment. Next few questions are based on this. Investments will be classified into current and long term investment. Current investment means those which are readily realizable and the intention is to hold for less than 12 months. At the end of the reporting period, current investment will be valued at cost or fair value, whichever is lower. Comparison will be done on individual basis. However, you can do comparison using category of investment also. So all equity share can be treated as one category, all preference share can be treated as one category, all convertible debenture can be treated as one category. Global or overall approach should not be used. Comparison should be between cost and fair value and not between the carrying amount and fair value. Long term investments are usually valued at cost. But if there is a decline in the value other than temporary, then this will be a permanent decline, and then the company will have to make a provision for decrease in value of investment. Company will have to make a provision for decrease in the value of investment. And again, here also point number 3 and 4 are same. Such reduction should be done on investment by investment basis, on individual basis, and not on overall basis, not on overall or global basis. Yes or no? So now this is a small summary. First, check whether the investment is current or long term. If it is current, take lower of cost and fair value, and if it is long term, then investment will be valued at cost. Then investment will be valued at cost. Of course, provision will be made for decrease in value of investment for reasons other than temporary. For reasons other than temporary, we will make a provision for decrease in the value of investment. Now we'll solve question number 1. Printed in the notes, question number 1, there only. A manufacturing company purchased shares of another company from stock exchange on 1st May 2007. So there is a purchase of share. The cost is 5 lakh. It purchased gold for rupees 2 lakh. Wonderful. And it purchased silver rupees 1 lakh 50,000 on 1st April 2005. How will you treat this investment as per applicable Ind AS in the books of the company for the year ended 31st March 2008 if the investments are as follows? The value of these investments are: share is 2 lakh, gold is 5 lakh, silver is 2 lakh 50,000. Silver is 2 lakh 50,000. So how are you going to value this investment? So these are the fair value. What is the cost of share? 5 lakh. What is the cost of gold? 2 lakh. What is the cost of silver? Cost of silver is 1,50,000. Now this question is not clear whether these investments are current investment or long term investment. If current investment, if current investment, what will be the answer? And if long term investment, if long term investment, what will be the answer? If long term investment, what will be the answer? Under long term investment also, that there are two possibilities. Decline is temporary and decline is permanent. Decline is temporary, decline is permanent. Because we don't know what is the intention of this company. Because this instrument given in the question can be current investment also and can be long term investment also. So therefore I will write all the answer. Whatever institute will like, it will keep it. Is it right? So first assume that these investments are current investment, because these are readily realizable items. Shares are readily realizable, gold is readily realizable, silver is readily realizable. So realizability test is okay. Intention is not given. So assuming intention is to hold for not more than 12 months, some student will say this is 1st April 2005, this is 31st March 2008. Possible. You may have an intention to hold it for not more than 12 months, but for some reason you are not able to sell it. Then also it's okay. Then also it is okay. Even though it is still held for 3 years, but the intention to sell continues, we can still call it as a current investment. So one by one, student will reply, suppose these are current investment. Suppose share is current investment. My dear student, what will be the answer if share is current investment? Fair value is 2 lakh. Cost is 5 lakh. Fair value is 2 lakh. Cost is 5 lakh. Come on, answer. So we will take lower of the two. The answer will be 2 lakh rupees here. If it is current investment. Gold, lower of the two, 2 lakh. Cost is lower. Silver, lower of the two. Come on, answer. 1,50,000. Please listen to me carefully. I am explaining everything. You can treat gold and silver as current also, because they are readily realizable and the intention may not be to hold for more than 12 months. Okay, so the answer is, if it is current investment, then 4,50,000. Then 4,50,000. Long term investment. If decline is temporary, then we will take at cost only. Share at 5 lakh, gold at 2 lakh, silver at cost 1,50,000. So my answer will be 8,50,000. If all these are treated as long term investment and the decline is assumed to be temporary, okay, come on. If decline is permanent, then in case of share, I will take 2 lakh. But in case of gold, I will take cost only. Increase will not be taken, decrease can be taken. And in case of silver also, I will take 1,50,000 only. So this will be total 5 lakh 50,000, total 5 lakh 50,000. Gold will be 2 lakh, silver will be 1 lakh 50,000, shares will be 2 lakh. Shares will be 2 lakh. Is it right? And what we will do in case of permanent decline, we will make a provision for decrease in value. We will make a provision for we will make a provision for decrease in value. So this way the student can write the answer. He can assume these investments are current investment. Then you will apply the rule cost or fair value, whichever is lower. If you assume these are long term investment and the decline in the price is temporary, then take at cost. But if you assume that decline in price is other than temporary, then you will take the fair value and make a provision. Is it right? So today's homework is read this answer. Read the answer as homework. Question number 1 is over. Now we'll come to question number 2. Now we'll come to question number 2. Everybody is ready for question number 2. These all questions are taken from past examination only. So mark important. Question 1 important, question 2 important, because they have asked this question in the exam. So what is that question? It says A Limited has the following investment. 1. Purchasing the following equity share from the stock exchange from the stock exchange on 1st June 2009. Scrip X Y Z. Then purchase gold 3 lakh rupees. Gold also purchased for 3 lakh. What was the date of purchase of gold? 1/4/2006. 1/4/2006. What was next purchase? Mutual fund. Shabash. Next purchase is mutual fund. Was purchased on 31st March 2009 for 6 lakh. Shabash. What about next purchase? Government securities. Government securities purchased for 5 lakh. On which date? On 1/4/2009. How will you treat these investment as per applicable AS in the books of the company for the year ended on 31st March 2010 if the value of these shares are as follows? If the value of these investments are as follows. So now we are given fair value. Now we are given fair value. How much is fair value of share X? 1,90,000. Share Y 40,000. Share Z is 70,000. Oh my god, so much loss. Then gold, gold is 5 lakh. Gold is 5 lakh. Gold is 5 lakh and mutual fund is 4 lakh 50,000 and government security is 7 lakh rupees. Government security is 7 lakh. Government security is 7 lakh. Okay. So now we'll come to the answer. Now check in the question, have they mentioned whether these investments are current investment or long term investment? Not mentioned. From the date we can understand maybe gold is a long term investment because it was purchased uh, many years ago, but other investments are near 12 months only. The other investments are near 12 months only. So therefore, it is easy to assume that all other investments are uh, current investment. Question is silent. What the student should do? He should assume three things. First, he can assume that all these investments are current investment. First, you assume investments are current investment. Second, you assume investments are long term investment. Under long term investment, you make two assumptions: temporary decline, temporary decline, and you can assume permanent decline, or you can say not temporary decline. Is it right? You can assume permanent decline. Okay. So let us now start solving one by one. First, assume a current investment. Student will answer now cost or fair value, whichever is lower. So for script X, the cost is lower, 1,80,000. For script Y, fair value is lower. For script Z, fair value is lower. So value of these three shares together would be now 180 plus 40 plus 70. Come on, 180 plus 40 plus 70. So shares will be valued at 2,90,000. Very good. Shares will be valued at 2,90,000. Come on, answer fast. Gold will be valued at. Gold will be valued at 3 lakh. Lower of the two. Mutual fund will be valued at 4,50,000. And government security will be valued at, government security will be valued at 5 lakh. Government security will be valued at 5 lakh. Can anybody tell me the answer? If all investments are treated as current investment, if all investments are treated as current investment, what will be the total value of your investment? What will be the total value of your investment? Just check, is it coming to 15,40,000? Yes, it is right, 15,40,000. Come to next column. Assume investments are long term and any decline in the value is temporary. Assuming investment is long term and any decline in the value of investment is temporary. So in that case, all investments will be valued at cost. If it is long term, if it is long term, all investments, this cost column you put it here, cost column. If you assume whatever decline is there is a temporary decline, is a temporary decline. Suppose there is a pandemic, suppose, so share price will go down for some time. Okay, share price may go down for some time, but again after 6 months or 12 months, they come back to their normal prices. So we will assume the decline is temporary. So the answer for this question will be now 4 lakh plus 3 lakh. Come on, 4 lakh plus 3 lakh plus 6 lakh and plus 5 lakh. So this time the answer will be 18 lakh. This time the answer will be 18 lakh. But if we assume that the decline is permanent, if we assume decline is permanent, is it right? Then we have to make provision for decline in the value of investment. Script X will be at cost only. Script X will be at 1,80,000. But in script Y there is a decline. And we are assuming this decline is not temporary. So we will have to make a provision for decline 10,000 rupees. And similarly script Z. Oh, script Z, huge fall. So assume this is Jet Airways share, okay? This is Jet Airways share. Assume this is Vodafone Idea share. So decline is not temporary. Decline is permanent. So I will take 70,000 here. Total will be 2,90,000 and gold will be at cost. Sorry, gold will be at cost. Yes, 3 lakh because cost is lower. Mutual fund will be 4,50,000 assuming permanent decline. Government security will be 5 lakh. Government security will be 5 lakh. Okay, government security will be 5 lakh. So can you tell me the total of this last column, permanent decline? You will get same answer, 15 lakh 40,000, like current investment. Like current investment. Is it right? 15 lakh 40,000 like the current investment. So this is the answer. A good student would have noted down by now, and others may be just enjoying the show. So this answer is over from my side. You will read the answer also, read answer also as homework. Otherwise, in the exam, if you want, you can present in a tabular format. Okay? Try to improve your answer. Try to present your answer as best as you can. And write down all possible assumptions which are okay. Okay? Write down directly. Next answer is homework. Question number 3 now. Question number 3. Question number 3. Rose Limited has made an investment of rupees 500 lakh in equity share of Nose Limited. Wow, Rose in Nose. How beautiful it would look. Okay. So Rose in Nose on 10 January 2019. The realizable value of such investment on 31st March 19 is rupees 2 lakh. And how much you paid for it? 500 lakh. Oh my god. You paid 500 lakh. You paid 500 lakh and the value is now 2 lakh because company lost a case of patent right. Unbelievable. 500 lakh has become 2 lakh. So this is what stock market can do to your wealth. Okay. 500 lakh you have invested in around 2 months and 20 days. It has gone down to 2 lakh only. Only you lost 498 lakh. Only. Okay, 498 lakh you can lose in 2.5 months. Still, if you want to invest in share market, you are welcome. Rose Limited follows financial year as accounting year. How will you recognize this investment in financial statement for 2018-19? How will you recognize this investment in financial year 18-19? First check whether it is a current investment or a long term investment. Check whether it is a current investment or a long term investment. Nothing is given. So my answer will be assumption 1. My answer will be assumption 1. Current investment. Current investment. Cost or fair value, whichever is lower. Cost or fair value, whichever is lower. The answer is 2 lakh. Assumption 2. Long term investment, LTI. To save your valuable time, we'll take LTI, long term investment, and decline is temporary. Decline is temporary. The answer will be rupees 500 lakhs. That is at cost. And assumption 3, write down. Assumption 3, long term investment. Long term investment decline is other than temporary, or you can say permanent. Decline is permanent. Answer will be 2 lakh. Answer will be 2 lakh. The company has to make provision for decline. The company has to make provision for decline. The company has to make provision for decline of rupees 498 lakhs. Oh my god. 498 lakh. After reading this problem, I hope you are motivated to invest in the share market. Say yes or no. Say yes. We are now motivated. After reading this question, your 500 lakh can become 2 lakh in 80 days. This answer is over. This answer is over. If you want to write down fast. Homework. Read the answer given by the institute. That also you can write. This also you can write. Or you can mix them and write down. So one student is saying, no, I don't want to invest in share market. That's good. But you should not worry. This kind of things will happen. Assume the decline is temporary and invest in the share market. Share market is a place where you create wealth. Okay. Please come to question number 2 to the power 2 equal to 4. 2 square. X limited on 1/1/2020, X limited on 1/1/2022 had made an investment of rupees 600 lakh in equity share of Y limited. Now this time they are mentioning 50% is long term category and the rest is temporary investment. So current investment is 300 and long term investment is 300. So they are decided to treat half of it as current investment and half of it as long term investment. The realizable value of all such investment, the realizable value of all such investment on 31st March 13 became 200 lakhs as a case of copyright is lost. Oh my god, case of copyright is lost. What is copyright? Please answer. What is copyright? So if the case is lost, so the fair value is now, fair value of all investment is 200. 100, 100. Is it right? So this is how the fair value has become now. Now the problem is, how will you value it? Valuation. Valuation. Current investment will be valued at 100. Lower of cost and fair value. Lower of cost and fair value. So current investment we don't have a problem. Current investment we will value at 100, lower of cost and fair value. What about long term investment? Now here we will have two answers. One, rupees 300 lakhs if decline is temporary, if decline is temporary and rupees 100 lakh, if decline is other than temporary, if decline is other than temporary, if decline is other than temporary. One student is saying copyright means the legal right to use. Very good. Legal right to use. Legal right to ensure that only you can use your intellectual property. Others can't use it. Others can't copy. So copyright gives you a protection. Okay, that your product cannot be copied by others. Your software, your books, your video recordings cannot be copied by others. So let us go to next question now. Answer I have written. Whatever possibilities were there, I have written all the answer. If it is current investment, 100 rupees. Long term investment, temporary decline at cost, 300. Long term investment, permanent decline, 100 rupees. Company will have to make a provision for the loss. Homework. Read the answer. Read the answer. I have given you the answer in the tabular format. Learned student will automatically write. Okay. And those who are just the visitor, okay, enjoy. Come to the next query now. Question number 5. Question number 5. Question number 5 now. Please read this answer. Such a long, lengthy answer, Institute will write for you. 5. Question number 5. JVR Limited has made investment of rupees 97.84 crore in equity share of QSR Limited in pursuance of joint venture in 2001-2. The investment has been made at par. No problem. So your investment is cost is 97.84 crore. Oh my god. QR Limited. QSR Limited has been in continuous loss for 2 years. So the company where you have invested is making continuous loss. Continuous loss. So this is an indication of permanent decline. This is an indication of that the decline in the price is permanent because the company where you have invested that is making a continuous loss. JVR Limited is willing to reassess the carrying amount of its investment in QSR Limited. JSVR Limited is willing to reassess the carrying amount of the investment QSR Limited and wish to provide for diminution in value of investment. And they want to provide for diminution in the value of investment. Next is, however, QSR Limited has futuristic and profitable business plan. Now they are giving a different view. First, they created an impression that this loss is permanent and we have to provide for it. Now they are saying, don't worry, the company has futuristic and profitable business plan and the projections for the coming year. Company is very hopeful that we will be able to make profit in future. Discuss whether the connection of JVR Limited to bring down the carrying amount of investment in QSR Limited is as per AS. To discuss whether the contention, write down contention, whether the contention of JVR Limited to bring down the carrying amount of investment in QSR Limited is in accordance with the accounting standard, is in accordance with the accounting standard. So what is your view? This company wants to provide for diminution in the value of investment. JVR Limited has invested in shares of QSR Limited. QSR Limited has futuristic and profitable business plan and projection for the coming year. So now the query is whether they can make provision for decline in the value of investment. Whether they can make provision for decline in the value of investment. Whether they can make provision for decline in the value of investment, or they should treat it at cost only, or they should treat it at cost only. They should treat it as cost, or they should make a provision for decline in value of investment. Kindly reply. Yes, everybody, reply. The answer is the decline appears to be temporary in nature. The decline appears to be temporary in nature. The decline appears to be temporary in nature. Hence, no provision for diminution in value of investment is required. Hence, no provision for diminution in the value of the investment is required. Assumption. What is assumption? Investments are long term in nature. Assumptions, write down, investments are long term in nature. Assumption is investments are long term in nature. Assumption, write down, investments are long term in nature. Okay. Investments are long term in nature. How do you know it is a long term in nature? Because they have entered into a joint venture agreement. Joint venture agreement means they must have decided that let us together work and construct a, say, bridge or a power plant or sell automobile. So on that basis we can say the intention is to keep the stock or the share for few years, not sell in 12 months. In your foundation you might have that joint venture arrangements are for very short period. That is not true every time. Some joint ventures have longer life. For example, Hero Honda was a joint venture which went on for 25 years. That is a joint venture which can go for many years. Today's homework. Please write down, read the answer. Read the answer. You will write that the decline is not permanent, hence provision is not required. Decline is not permanent, hence provision is not required. The company is optimistic that it will be able to make profit. On the screen, the answer is also there. The last three lines. The company has demonstrated future maintainable profit, then the present loss will be treated as temporary in nature. As there is no permanent decline in value, there is no need for creating provision for loss. So, this was one important and interesting discussion on valuation of current and long term investment. This discussion will be useful in solving advanced questions. So, now we are going to uh, just discuss quickly categories of investment on the basis of income. Categories of investment on the basis of income. So, there are, for our accounting purpose, we will say that there are two categories of investment. One is Fixed income bearing security. Fixed income bearing security means they pay you a fixed interest or fixed dividend rate. Fixed interest rate or fixed dividend rate. Okay. So once you invest in them, enjoy a fixed return of income. Enjoy a fixed return on your investment. Examples are government securities, debentures, bonds, preference shares. Preference shares also you can mention here. You can please add preference share also. Is it right? And there are some securities where your returns are variable. There is no fixed return. You may earn more, you may earn less. The example of fixed variable return of income is one equity share and second read on mutual fund. Third, you can say gold and silver also, where your profit or loss can change. Real estate, these are the areas where the returns are variable. Yes, you are right. Today, everybody should participate now. Everybody will participate. I am going to ask you some questions. So, our today's topic will be accounting of fixed income securities, accounting of debentures, bonds, investment in government securities, investment in government securities, that is, the investor will get a fixed rate of interest or a fixed rate of dividend. Okay. So to before I start the accounting of this investment in debentures and investment in bond, I need you to understand two terms. I need you to understand two terms. They are called come interest price and X interest price. There are come interest price and X interest price. Come interest price and X interest price. Student has to be now more careful, more attentive. Is it right? So continuously pay attention on the screen. Some basic knowledge first need to be discussed. When you invest in bonds and debentures, when you invest in bonds and debentures, they pay interest on fixed dates. They pay interest on fixed dates. They pay interest on fixed date. For example, most of these bonds and debenture pay interest half yearly. Like they will pay interest on 30th June and 31st of December. Or they may pay interest like this 31st March and 30th September. So most of the companies which have issued debentures or bonds, they pay interest half yearly, but they can also pay interest annually also or yearly. Yearly means once a year. Let's say, for example, they will pay interest only on 31st March. They may pay interest only on 31st of December. So, first point we have to make it clear. First point we have to make it clear that this company which issues debentures or bonds, they will pay interest on only fixed date. Some of them pay semi annually and some of them pay annually. Some of them pay semi annually and some of them pay annually. Okay. To whom they will pay? To whom they will pay? The one who will be debenture holder in the register of debenture holder on this date. The person whose name will appear in the register of debenture holder on 30th June and 31st of December, okay, or whatever date I have written, that person will be entitled for interest of that period. If it is semi-annual coupon paying, semi-annual interest paying bond, then the person whose name will appear on register on this date will get interest for 6 months. The person whose name will appear in the register of debenture holder on this date will be entitled for the interest for either 6 months or 1 year depending upon the company's policy. Is it right? Then your query will be why we are discussing all this? Why we are discussing all this? Now you understand the logic, because unless you know the background, logic will not help you. There are two friends. There are two friends. One is Sanket and one is Hardev. Oh Mahadev, mere Hardev. Sanket and Hardev are two friends. Are two friends. Sanket sold Sanket sold investment to Hardev on 30th September. This is 30th September. This is 30th June and this is 31st December. This is 31st December. Now, this company whose debenture Sanket has sold to Hardev has pays interest on two dates only. This company whose investment is sold pays interest on 30th June and 31st December. Who was holding the investment from 30th June to 30th September? Who was holding investment from 30th June to 30th September? So your answer will be Sanket. Sanket was holding. Who was holding investment from 30th September to 31st December? So your answer will be Hardev, assuming Hardev has not further sold, still holding. Hardev is still holding the investment. Okay. These 2 points have you understood? From 30th June to 30th September, Sanket was holding the investment, and from 30th September to 31st December, the investment was held by Hardev. Now, one question for 10 rupees. Those who will give correct answer will get 10 rupees. I will give you a check of Jupiter Bank. Okay. 10 rupees check. You can encash it if you can. On 31st December, who will receive interest? Who will receive interest from the company? Who will receive interest from the company? Who will receive interest from the company? On 31st December, who will receive interest from the company? So your answer will be, Sir Hardev, it was such an easy question because now Hardev is holding the investment. How much interest Hardev will receive from the company? How much interest Hardev will receive from the company? How much interest Hardev will receive from the company? So to help you to do calculation, assuming face value is 100 rupees and interest rate is 12%. How much interest Hardev will receive from the company? Face value is 100 rupees. Rate of interest is 12%. Give me the answer. Interest in rupees. How much interest he will receive? How much interest he will receive? How much interest he will receive? Give me answer in rupees. 6 rupees, 3 rupees, 12 rupees, 9 rupees, 6 rupees, 6 rupees, 12 rupees. Most of you are saying 6 rupees, but there are few candidates who said 12 rupees also. Unbelievable. You people are really genius. Where are your legs? I need to touch your feet. The person who said 12 rupees. The answer is 6 rupees. 100 into 12% into 6 by 12. You are right. He will receive interest for 6 months. The person who is a debenture holder on this date, Hardev is the interest debenture holder on this date. Company will pay interest for 6 months to this fellow whose name will appear in the register of debenture holder. Whose name will appear in the register of debenture holder for 6 months. But then Hardev is now surprised. His mouth is open. Why I received interest for 6 months? I was holding the debenture only for 3 months. Oh my God. Lottery for Hardev. Lottery for Hardev. He was holding the investment for 3 months. Company gave him interest for 6 months. Oh my God. Sanket is crying. Sanket. Sanket is crying. Sanket is crying. Hardev is laughing. Hardev is laughing. Okay, with a big tooth outside. Hardev is laughing. Sanket is crying. Oh my God. So, what will be the deal on this date now? On 30th September, when the transaction took place between Sanket and Hardev, they will have a deal. Sanket will tell Hardev, see, you are going to enjoy the interest for 6 months. But I was holding the debenture for 3 months. You take 6 rupees from the company. Okay? So Hardev says, yes, yes, okay. And you compensate me 3 rupees for this 3 months period, because for this 3 months period, for the first 3 months, Sanket was holding the debenture. For first 3 months, Sanket was holding the debenture. So therefore, in the selling price only, what they will do, they will adjust that 3 rupees. So Hardev will compensate Sanket for the loss of 3 rupees to Sanket, because ideally, ideally Sanket should receive 3 rupees interest, Hardev should receive 3 rupees interest, but company says this is your headache. I will pay interest only to one person, that person whose name appear in the register of debenture holder. If you are going to transact between yourself, it is your headache. How do you settle? Company will give interest to only one person, not to all the persons who are holding the debenture between this 30th June to 31st December. Otherwise, company will go mad. Is it right? So this is called, now on this date, there are two ways the pricing can be negotiated between these two parties. One is called come interest price and one is called ex interest price. Come interest price means, come interest price, as the name suggests, price is including interest accrued. Price is including interest accrued. Price is including interest accrued. Then what is X interest price? X interest price means price is excluding interest accrued. Price is excluding interest accrued, and interest has to be paid separately. And interest has to be paid separately. So let us come back to that example of Sanket and Hardev. This is 30th September. Come interest price, suppose all figures are assumed, is 105. It simply means Hardev will pay total 105 rupees to uh, Sanket. He will not pay more than that. But suppose the price is quoted X interest is 105 rupees. If the price quoted is X interest 105 rupees, how much amount? Question is how much amount Hardev will pay to Sanket? How much amount Hardev will pay to Sanket if the price is quoted as 105 rupees X interest? If the price of one debenture is quoted as 105 rupees X interest, what is the total amount paid by Hardev to Sanket? What is the total amount paid by Hardev to Sanket? Please answer. Show your skill. For your understanding, face value is 100 rupees and rate of interest is 12%. So show your skill and tell me if the price is quoted X interest, Hardev will pay 105 plus interest accrued for 3 months. Hardev will compensate Sanket for interest accrued for 3 months from 30th June to 30th September. From 30th June to 30th September. 3 months. Interest for 3 months will be 3 rupees. So the answer is 105 plus 3, 108 rupees. The answer is 108 rupees. Pawar is right. Jay Shri is right. Thakur is right. Suyash Sonam right. So this is how we can convert X interest into come interest price. Okay. So answer one more question. This is 31st March. This is 30th September. These are the interest payment date. These are the interest payment dates by the company. The transaction took place on 30th April. The transaction took place on 30th April. Face value 100 rupees. Interest rate 6% and come interest price is 105 rupees. The student will tell me what is X interest price. What is X interest price? Student will answer now. What is X interest price? This 30th is the date of purchase or sale by one party to other. Interest has accrued for 1 month. Come interest price is given 105, 105. Come interest price is given 105. What is the X interest price here? What is the X interest price here? what is the X interest price here? So you will check first what was the last interest date, 31st March. From 31st March to 30th April, interest has accrued for how many months? Interest has accrued for 1 month. Interest has accrued for 1 month. Therefore, X interest price is equal to cum interest price minus interest accrued for 1 month. Cum interest price is 105. Interest accrued will be 100 into 6% into 1 by 12. 100 into 6%, so that is 50 paise. So the answer will be 104.5. Answer will be 104.5. Most of you got it right. 104.5. Okay? Have you understood? Okay, we will try one more time. Okay, one more time. One more chance. So now you assume same situation. The transaction took place on, let us say, on 1st August. 1st August. And I am giving you X interest price 105. Find out the cum interest price. Find out the cum interest price. Find out the cum interest price. Face value 100 rupees. Interest rate is 6%. X interest price 105. Cum interest price question mark. First you calculate interest has accrued for how many months? Interest has accrued from 1st April to 1st August. April, May, June, July. April, May, June, July. Interest has accrued for 4 months. Interest has accrued for 4 months. So, cum interest price is equal to, you will take X interest price plus interest accrued for 4 months. So 105 plus interest is calculated always on face value. Interest is calculated on face value. 100 into 6% into 4 by 12. So this is 105 and this is 2 rupees. So that comes to 107. That comes to 107. Jadeja, Jayashri, Tiwari, you are right. Badamja. So most of you are able to get it right now. So finally, what is the summary of our discussion? The summary of our discussion is, look at the question and check whether the transaction is at cum interest price or X interest price. The transaction can be entered into by two parties at cum interest price or X interest price. Both are allowed. Both are allowed in the marketplace. For example, suppose you purchase something from Amazon. If you buy something from Amazon or a shop, let us say you bought this pen. So they will say 50 rupees, including GST. So it means it is cum GST price. It is cum GST price because GST is included. But suppose you go to some shop, you go to some departmental shop, look at their bill. look at their bill, it will be written like this: price 45, GST 5, total 50. So here the price is X GST, here the price is come GST. But in both cases, you have to pay the same amount. It is how the price is quoted is only different. In both cases, you are paying the basic price and GST. Same logic applies in bond and debenture market also. You are paying for the price plus you are paying for interest accrued. If it is quoted come interest price, there is no need to pay interest separately. If it is quoted X interest price, there is need to pay interest separately, or there is a need to collect interest separately. So that is the logic of come interest and X interest. Investments will always be recognized at, investment will always be debited at X interest price. Whether you purchase the investment on come interest basis or whether you purchase the investment on X interest basis, investment will always be debited or credited using X interest price. Interest will be separately recorded. Interest will be separately recorded because interest is a separate financial transaction. So there are two transactions which is happening together. One is the transaction of buying and selling of investment, and another is the transaction of receiving or paying the interest. So interest portion will go to interest account. Interest portion will go to interest account and X interest portion will go to investment account. In all cases, irrespective of whether the purchase or sale is made at X interest price or come interest price. So come interest price is including interest, X interest price is excluding accrued interest, and interest will be paid separately. Income interest price, interest is included in the price of the security, so separately you don't have to pay interest. Come interest price is X interest price plus interest. X interest price is come interest minus interest. Interest is equal to come interest price minus X interest price. So this is the equation. Okay. With the help of some actual numbers, we will be able to understand better. Take out your notebook. Now the time has come to solve questions. So we'll come to question number 6 now. Question number 6. Mr. X purchased from Y. Mr. X purchased from Y 400 15% debenture of AB Limited at rupees 95, come interest on 1615. Interest is payable on 30th June and 31st December each year. Record the transaction in the books of X and Y. Interest is payable on 30th June and 31st December. Interest is payable on 30th June and 31st of December. So first I will draw a timeline for clarity purpose. Last interest was paid on 31st December 2014. Then 30th June 15 and 31st December 15. These are the three dates. Okay. We have purchased the investment on 1st June 15. This is the date of purchase. This is the date of purchase. And what is the price they have taken? 95 come interest. The price they have taken is 95 come interest. And what is the total number of debenture? 400. So that total amount paid is 95 into 400. The total amount paid is 38,000. Total amount paid is 38,000. Now in this question, you write down one thing which is not printed clearly. Face value is rupees 100. Please write down face value is rupees 100. Interest will accrue from how many months? Interest will accrue for last interest was paid on 31st December. The transaction is happening on 1st of June. So interest will accrue for the period from 1st January to 1st June, that is 5 months. Interest will accrue for 5 months. So what will be the interest amount? Interest amount will be 400 debenture into 100 rupees face value into 15% into 5 months divided by 12 months. 400 debenture into 100 rupees face value, so that is 40,000 into rate of interest 15% into 5 divided by 12 equal to how much? So that comes to 2,500 rupees. So first you will calculate the interest. Interest is 2,500 rupees. Therefore, X interest price will be 38,000 minus 2,500 is 35,500. So first whatever question comes, you need to find out what is the interest accrued and what is the X interest amount. I need X interest amount for recording the investment, and I need interest amount for recording the interest. Okay, so Jatin Gupta 2,500 is right. Kunal Pancharia 35,500 X interest price is right. Now what is the journal entry we will pass? In the books of X Limited, who is X Limited? Buyer, purchaser of investment. He will record investment at X interest price, investment in debenture of AB Limited account debit. This is X interest price. Interest on investment, debit 2,500. Interest he will pay separately. Even though it is a come interest price, I need to pass entry always in this manner only. Separate the X interest amount and interest amount. To bank, total amount paid. To bank 38,000 is the total amount paid. This is the entry in the books of buyer. What about the entry in the books of the seller? In the books of seller, bank account debit 38,000, just reverse the entry. To investment in debenture of AB, he will also credit the investment with X interest amount only, and he will enjoy the interest for 3 months. So interest will be credited by 2,500 rupees. You will find that the entry passed by buyer and seller are just the opposite. But in case of seller, one more thing you have to note down. So the answer is printed in your book. You can just write a note here. In the books of Y, write a note here. The seller will also recognize, the seller will also recognize profit or loss on sale of investment. The seller will also recognize the profit or loss on sale of investment. So this was my question number 6. If the price is quoted X interest, if the price is quoted X interest, the purchaser will pay interest to the seller in addition to the price. The amount of interest will remain the same. Now suppose in the same example, if the price was 95 rupees X interest, if the price was 95 rupees X interest, then my come interest price will be 400 into 95 is X interest price and plus 2500 interest accrued already calculated, and that will become 40,500. If the same question would have said that the transaction was at X interest price, I will add interest separately, and then my come interest price is 40,500. It means buyer will have to pay 4,500 to the seller, and the journal entry would change as follows. This is the total amount paid, and the journal entry would change as follows. The buyer will pass the entry investment in 15% debenture account debit 38,000, always X interest, always X interest, interest on debenture debit 2,500 and to bank total amount paid. Seller will pass the reverse entry. Who is Y here? The Y is the seller of the investment. He will pass an entry bank account debit 40,500 to investment in debenture of AB Limited account 38,000 and to interest on investment account 2,500. You will write a small note here. In the books of Y, write a small note. The seller will also recognize gain or loss on sale of investment. The seller will also recognize the gain or loss on sale of investment. The seller will also recognize the gain or loss on sale of investment. Now what I'll do, sometime in the problem, the nature of rate is not given. So this is the instruction to the student. The problem says A sold debentures to B for rupees 103, but they have not mentioned whether it is X interest or come interest. The student will assume and write a note also that it is X interest price. So we will assume, if the question is not clear, the price given is X interest price, highlight or underline. If the question is silent, the student will assume that the price is X interest price. So what are the accounting entries you will pass for purchase and sale of investment? Accounting entry at the time of purchase of investment. Accounting entry at the time of purchase of investment. As we have seen just now in one example number 6, you will debit investment account X interest price plus any cost of acquisition, plus any cost of acquisition, example brokerage. In the first part of this chapter we have seen the cost of investment will include brokerage fees, commission, duty. So if any fees, commission, duty, brokerage is paid, that is also added to the X interest amount. That will also be added to the X interest amount. Then you will debit interest on investment, interest accrued. Example number 6 will help you to understand this interest accrued, which it was 2500 rupees and to the bank. Total amount paid. The total payment will be the cum interest amount paid plus any acquisition cost like brokerage, like fees, like stamp duty, like commission. So those will also be added. This is the entry in the books of buyer. But in the books of the seller, we have to first pass entry for sale. First, we'll have to pass entry for sale. Just reverse the previous entry. He will pass the entry bank account debit. Total amount received, cum interest price means total amount received minus any brokerage paid. Very important. Both parties pay brokerage. Buyer also pay brokerage. Seller also pay brokerage. Brokerage is enjoying brokerage from buyer and seller. What is the net amount realized by the seller? The net amount realized by the seller is cum interest price minus any expenditure incurred to sell. Normally he has to pay the brokerage. So the answer will be cum interest price minus brokerage. To investment, the amount will be equal to X interest price minus any brokerage and to interest on investment, accrued interest. Seller has to pass one more entry. Seller has to pass one more entry. Ask me why. Seller has to pass one more entry because he is going to record profit or loss on sale. He is selling, which means there is a gain or loss. So the entry for profit or loss. If there is profit, you will write investment account debit to profit on sale of investment, and the amount is equal to X interest price minus cost price. That is where your selling price is more than the cost price. Sometimes there can be loss also. Entry for loss. Loss on sale of investment account debit to investment account if your cost price is more than the X interest price net. When we'll solve the problem, you will see the calculation also. Where will you transfer this profit or loss? This profit or this loss is transferred to profit and loss account. In this chapter, in this chapter, any profit or loss, any profit or loss will be transferred to P&L account. Don't transfer to any capital reserve, general reserve or any other reserve. Rather, transfer it to P&L account. Note number 1. Very important. So student will pay attention here. Brokerage. Treatment of brokerage. Treatment of brokerage. Brokerage is the amount you pay to the broker who helps you to buy and sell. Brokerage is paid at the time of purchase also. Brokerage is paid at the time of sale also. If you are purchasing, add brokerage to X interest price because this is a part of your total cost. If you are selling the investment, deduct from X interest price. If you are selling the investment, it is a outflow, it is a cost to the seller. So the net cash inflow will be sale price minus any brokerage paid. So brokerage is deducted from the selling price when the investment is sold. Next point, This is one big problem in the institute's question. They will say brokerage is 1%. Brokerage is 1%. Now, 1% of what? 1% of what? Is it 1% of face value? Or is it 1% of X interest price? Or is it 1% of come interest price? Question. If the institute says brokerage is 1% of face value, take 1% of face value. If the institute says 1% of X interest price, take 1% of X interest price or 1% of come interest price. But sometimes the question is silent. Sometimes the question is silent. So write one note from my side. If question is silent, like you are silent now, if question is silent, assume brokerage is paid on X interest price. Assume brokerage is paid on X interest price. Assume brokerage is paid on X interest price. If the question is silent, assume that the brokerage is paid on X interest price and write a note in the exam. And write a note in the exam. And write a note in the exam because this can be risky. You may assume X interest, institute may assume come interest. So then there will be a difference in the answer. Point number 4, important point number 4, profit or loss on dealing with security during the year may alternatively be transferred to profit and loss account with consolidated sum. It means either you transfer to P&L account on every sale or once in a year or once in a year. So what does that mean? What does that mean? Suppose I have sold investment 5 times in a year. Suppose I have sold investment 5 times in a year. So on every sale I will calculate the profit or loss and transfer it to P&L account. Option number 2, at the end of the year, calculate the total profit or loss. At the end of the year, calculate the total profit or loss on all the sales made during the year. On all the sales made during the year and transfer one total profit or total loss figure to P&L account. Both are acceptable. You can either transfer to P&L account one by one or you can transfer lump sum amount at the end of the year. So both are okay. No problem. Next concept is interest accrued on investment. What is the meaning of interest accrued on investment? A company pays interest only on specified dates. Suppose our financial year is 1/4/2020 to 31st March 2021. This is my financial year. This is my financial year. Okay. And the company pays interest on 30th June and 31st December. These are the interest payment dates. The company where we have made the investment, that company interest payment date is 30th June and 31st December. And this is our year ending date. This is our year ending date. So what will be the problem now? Till 31st December, till 31st December, we have received interest. Till 31st December, we have received interest. No problem. Till 31st December, we have received interest. Next interest will be received on 30th June 2022. This is the next interest payment date. But we have to close our books on 31st March 2020. Therefore, what I will have to do, I will have to provide for interest accrued for 3 months. In our example, I have to provide for interest accrued for 3 months. Interest accrued means interest has been earned but it has not been received. With every passing day, you earn interest. Interest keeps accruing. Payments will be made on a particular date only because companies follow accrual method of accounting. Income which has been earned will be recorded even though it has not been received. Accrual concept. So therefore, on 31st March, company will pass the entry interest accrued on investment account debit to interest income account. Interest accrued on investment account debit to interest on investment account, being interest accrued for 3 months, and interest income will be transferred to P&L account. Interest accrued on investment will appear in balance sheet. Will appear in balance sheet. Is it right? So at the end of the year, see whether any interest has accrued. If interest has accrued, the entry for interest accrued will be interest accrued on investment account debit to interest income. Interest accrued on investment will go to balance sheet under current asset. Interest income will be shown in profit and loss account. Now what will happen on 1st April 2021? Next year, reverse the entry. Next year beginning, reverse the entry. So what entry we will pass next year beginning? Next year at the beginning, reverse the entry. Interest income account debit to interest accrued on investment. Next year beginning, reverse the entry because this income will be received in this year for full 6 months. Don't worry. So reverse the 3 months entry. Reverse the 3-month entry, reversal of this entry. So the student has to take this care. If the interest dates are different from year ending date, if interest dates are different from year ending date, then the problem of accrued interest will arise. If interest date and year ending date are same, then the problem of interest accrued will not arise. Okay? So now you read your notes, you will understand. Interest due dates and the interest year ending date may not necessarily coincide, may not be same, may not be same. Under the mercantile system of accounting, interest accrued from the last due date till the year end will be provided for. So the entry will be interest accrued account debit to interest on investment. Subsequently, in subsequent year, the interest entry will be reversed. Okay, so that is about interest accrued. Next paragraph, how to determine profit. How to determine profits. AS 13 AS 13 says check whether the party is an investor or whether the party is a dealer. Check whether the party is an investor or the party is a dealer. The party, whether he is investor or whether he is a dealer. If the party is investor, the profit or loss will be calculated by applying average cost method. So cost will be calculated using average cost method. But if the party is a dealer, the cost will be calculated by applying FIFO method. If the party is a dealer, dealer means one who buys and sells securities. Okay, one who buys and sells security frequently, and for him security is held as stock in trade. For him, the security is like a stock in trade. It is their routine business, daily business to buy and sell security. So a dealer can follow FIFO or average cost method. A dealer can follow FIFO or average cost method, but if the investment is not held as stock in trade, then you have to follow only one method, and that is called average cost method. That is called average cost method. If investments are held as stock in trade, calculation can be done by FIFO or average cost method. FIFO or average cost method. Now understand how this average cost works. Example: Mukesh purchased shares on following dates. Mukesh purchased shares on following dates: 11th March, 100 shares at rupees 120. Example, write down: Mukesh purchased shares on following date: 15th March, 250 shares at rupees 180 each. Mukesh sold 200 shares on 18th March at rupees 200 each. Calculate profit or loss using average cost method and FIFO method. So you will see how to calculate, and this will come in the subsequent question 7, 8, 9, 10, 11, 12, where we will be required to apply either average cost or FIFO method. So I hope you have noted down the question. If I am following average cost method, so write down case 1, average cost method. average cost method. Okay. So under average cost method, my sale value is 200 shares into 200 rupees is equal to 40,000 rupees. 200 into 200 is 40,000. And what will be my cost? What will be my cost? My cost for 200 shares will be 200 into average cost. Average cost will be total of these two shares purchased divided by quantity. So my average cost will be 100 into 120 plus 250 into 180 divided by quantity 100 plus 250. So this will require some efforts on your part. Please try. First take the average cost per unit 100 into 120 equal to 12,000. Then 250 share into 180 equal to 45,000. Total cost is 57,000 divided by total 350 quantity divided by 350. So your average cost is 162.857. 162.857 into 200 quantity sold. So that comes to 32571 rounded off. Is it right? 32571 rounded off. 200 quantity sold. And the average cost will be total amount paid divided by total quantity. 32571 is the answer. So the profit is, I will write the profit here. Profit is 40,000 minus 32571 7429 7429 7429 or 7430 you can write 7439 29 7429 7429. This is called average cost method. 1 or 2 rupee difference is okay. Moonrise Chaurasia right. Jay Shri MV right. Sakshi right. Now I am going to solve it by FIFO method. FIFO method means first in, first out, first in, first out. So I have sold 200 unit. I have sold 200 shares. I have sold 200 share. 100 will be assumed out of the first lot and 100 will be assumed out of second lot. 100 will be assumed out of first lot, 100 will be assumed out of second lot. So my cost will be, I am going to erase now. Cost will be 100 out of the first lot and 100 out of the second lot. So can you please tell me what was the first lot 100 into 120? 12,000. And what was the second lot? 250 rupees. 100 into 250, that is 25,000. So my total cost of investment sold is 37,000 and my sale value is 200 into 200 is 40,000. Therefore, the profit will be 3,000. Therefore, the profit will be 3,000. Check the answer now. The profit is 3000. Is the profit 3000 rupees now? Is the profit 3000? This is called FIFO method. I am sure you have done similar thing in cost accounting subject also by now. In cost accounting, same calculation is done for inventory. Okay, here we are doing the same calculation for finding the cost of investment. Is there any query now? Otherwise, we have to solve questions, question after question, question after question. So please come to next part. From here, we will start solving some questions on debenture as investment. Here we are solving investment in debenture problem now. We as a student will draw the following format. We as a student will draw the following format for investment account. The student will start from the name of the investor, books of investment account. For the period from, you will write opening date and last date of the year. Then you will mention name of the security here. Interest due date you will mention here, due date 30th June, 31st March, whatever, and face value you will mention. So these are some basic information you have to mention here. Okay, these are some basic information you have to mention here. This, did I make some mistake in calculation? Was this not 250 or was it 180? Just let me correct. This figure was, if it was 180, then my answer will be 18,000. This is 30,000, and then 10,000 will be profit. So just check in your question. I forgot the question, so I took 250. So if it was 180, kindly rectify. Don't worry. That was only for example sake. Okay, back to the format. What we will do after writing this introduction about the question, name of the investor, investment account, date, security, face value, then we will start presenting this format. This format has only 12 columns. Oh my god. 6 columns on the debit side, 6 column on the credit side. Then your query will be, is it compulsory? It is not compulsory, but we will follow this format because this is institute is also following it in most of the exam. So first understand debit side. You are drawing one investment account, date column, particular. This is face value column. Face value column is really not required, but this helps us to calculate the interest. This will help us to calculate the interest. This will help us to calculate the interest. This will also help us to calculate the profit or loss. Sometime it will be useful for closing investment purpose also. And this helps us to keep a track of what is the total face value of debenture or investment we are holding. Then number will help you how many units quantity you are holding. So this helps us in number reconciliation. This is the amount. This is the amount where we record the cost of purchase of investment. In this format, what we have done, we have added one interest column also. We have added one interest column also. We have added one interest column also. Otherwise, we can prepare two format. One for investment and second for interest. But if you look at the institute's answers, in questions on investment accounting, they have added the interest column also in this format only, but that is not compulsory. You can put a separate interest account. Then on the credit side, we have date, particular, face value, number, amount, interest. If there is a opening balance, You will write to balance brought down, and whatever details are given, you will write. If there is a difference between interest date and year ending date, if there is a difference between interest date and year ending date, if there is a difference between interest due dates and year ending date, then there will be interest accrued. Remember, last year they must have credited interest income. This year we are going to reverse it. This year we are going to reverse it. Interest account debit, interest account debit to interest accrued on investment. This is the reversal of last year interest accrued. This is the reversal of this is the reversal of last year's interest accrued. And then we will purchase the investment. Entry for purchase to bank account. At the end of the year, we will transfer the profit or loss to P&L account. We will transfer the entire interest income to P&L account. Is it right? Credit side, buy bank, sale of investment, when we sell the investment, buy interest, when we receive the interest on investment. Interest received will be written in interest column, and when you sell the investment, you will write in face value column, number column, amount column, and interest column also. At the end of the year, at the end of the year, you will pass entry for interest accrued. If there is a difference between year ending date and interest due dates, and at the end you will write by balance carried down, face value number, you have to calculate the value of your closing investment here and complete the answer. So this is the format of investment account that we are going to follow. This is the format of investment account we are going to follow. And now from next minute onward, question answers will begin. Kindly come to question number 7. 007. Question number 007 printed below. Okay. Very important question. Similar question was asked in one exam recently. So that also we are going to discuss. All of you are ready? Say yes, we are ready. Then I will start. Chapter is lengthy because there are many questions which we have to perform. With practice only you can master this chapter. So let us start quickly. On 1st April 2010, XY and company held 9% debenture. First you underline this date. Then you underline 9%. This is the interest rate. 9% debenture in Mumbai Limited. This is the name of investment. Of the face value of rupees 10,000. What is the face value? 10,000 at a cost of rupees 8,000. So this is my opening balance. This information is for opening balance. Everybody is ready? Next sentence. Market value on that date was 9,000. Opening balance cost is 8,000. Opening balance market value is 9,000. And opening balance face value is 10,000. So much information is given. You need to choose the correct figure and solve. Next point says interest is payable on 31st December every year. So the company Mumbai Limited, where you have invested your money, will pay once a year interest, whereas the year ending date of the investor is 31st March. Interest payment date and year ending date are different. So in this question, there will be an issue of interest accrued also. Now see, on 1st of December 2010, debenture of the nominal value of 6,000 were purchased for 5,000 x interest. So the price is 5,000 x interest. Face value is 6,000. This is one transaction of purchase. And on 31st December, debenture of nominal value of 2,000 were sold. There is a sale transaction also. Sale is on come interest basis. Come interest basis means the buyer will pay interest to the seller. Come interest price means the buyer will pay interest to the seller and the interest is already included in the price. Interest is already included in the price for rupees 1900. One more transaction. On 1st March 11, next transaction is third transaction. Debenture of nominal value of 6,000 were bought at 5800. One more purchase. Market value of the debenture on 31st March 2011 is 90 rupees. Market value is 90 rupees for one debenture per debenture. This is given for calculation purpose. Make out the investment account in the books of XY Limited and Company showing profit or loss on sale of investment. Stock on 31st March each year is valued at cost. Cost will be calculated by applying FIFO method. Underline, cost will be calculated by applying FIFO method or market price. Or market price. So we will assume this is current investment. The reason why we are assuming current investment, the question says cost or market price, whichever is lower. And second reason they are asking us to apply FIFO method. FIFO method can be applied only if the securities are held as stock in trade. But because the question is saying FIFO method, I will follow FIFO method. I will also follow FIFO method. So in this question there are two purchase transaction and there is one sale transaction. Two purchase and one sale transaction. Understood? Keep the question continuously in front of you so that you will understand it better. So first what you will do, first the student will draw this format. Write down books of XY and company. Books of XY and company. Next line investment account. Then a next line for the period from 1st April 2010 to 31st March 2011 to 31st March 2011. Format is ready. Security write down. The name of the security is 9% debenture. 9% debenture in Mumbai Limited. Name of security 9% debenture in Mumbai Limited. Interest due date is 31st December. and the face value is rupees 100 per debenture. Face value is rupees 100 per debenture. If you write properly, it will be good. So what the student can do, you can, instead of using vertical notebook, you can just rotate your notebook. Okay, landscape format you can use, so that you can write nicely. So that you can write nicely. So is the format ready? Is the format ready? Tell me. All of you, please let me know whether your format is ready. Say yes. The format is date, particular, face value, number, amount, interest. Date, particular, face value, number, amount, interest. Draw around 20-25 lines. You need scale because there are so many columns. Draw properly, use scale. Is it over? One student is asking, where is face value rupees 100 per debenture? I was waiting for this question. You are right. Face value is not given, but somewhere in the last three lines, market value of debenture is rupees 90 is given. When will market value of a debenture be 90 rupees? Normally, debenture market value does not deviate too much from face value. So, in that case, what you can do, you can assume when the market price is given near 100 rupees, assume 100 is face value. If market price is given near 1000 rupees, like 950, 990, 1010, you can assume 100 rupees. However, it will not affect your answer. It won't affect your answer. Don't worry. If you want to assume 100 rupees, assume. Otherwise, ignore that line. We can still do the calculation. That is only for filling that number column. If I don't know the face value, I won't be able to complete the number column. Still, we can solve the problem. Then you can ignore the number column. Format is ready. Most of you are saying format is ready. Okay. So I am ready to solve. Format is ready. First, we will complete one working note 1. So please write down working note 1, purchase and sale of investment. Purchase and sale of investment. Purchase and sale of investment. So what I'll do, I will first prepare a format. Working note 1, purchase and sale of investment. And these columns will help us. So please write down date. Please write down date. Then write down interest accrued. Interest accrued. Under interest accrued, draw three columns: from, to, number of months. From, to, number of months. Then one column face value for calculating interest. Next column is X interest price. Next column interest at the rate of 9% per annum. Interest at the rate of 9% per annum. Interest at the rate of 9% per annum. Last column is come interest price. Last column is come interest price. Last column is come interest price. Very important question we are solving. You write down purchase. keep around 4 lines blank, then write down sale. Only draw the first format right now. Only draw the first format. This will help us to solve the question easily. Help you to understand also. Any other format if you want to use, you are welcome. I have no problem. So start purchase. There are two purchase transaction in this problem. If you look at it carefully, in the second line, 1st December 2010, there was a purchase of investment, okay, whose nominal value was 6,000 rupees. Nominal value means total face value. Nominal value means total face value. You have to tell me for how many months interest will accrue. This company pays interest only once in a year. That is on 31st December. That is on 31st of December. So suppose you focus now. This is the year. We have purchased on 1/12/2010. Company pays interest on 31st December only. It means the last interest was paid. The last time the interest was paid was 31/12/2009. So interest will accrue from 1st January 2009 to 1st December 2009. This is the period for which interest will accrue. So you are right, 11 months. From 1st January 2010 to, you can say, 30th November 2010. For 11 months interest has accrued. For 11 months the interest has accrued. Write down 1st January 2010 to 30th November 2010, 11 months. Now next thing is we need to check in the question whether we purchased on X interest basis or cum interest basis. This was purchased for 5,000 X interest. It is written in third line. You have to calculate interest on face value at 9% for 11 months. Multiply 6,000 into 9% into 11 by 12, and that will give you interest amount. So the interest amount comes to 495. Interest is 495. Cum interest amount will be 5,000 plus interest 5495. When you read the question in the fourth line, on 1st January 2011, on 1st January 11, debenture of the nominal value of 6,000 was bought on cum interest basis. Debenture of the nominal value of 6,000 was bought at 5,800. At 5,800. Now wait a minute. There is an important query I have to handle. What is the number of months for which interest has accrued? Please answer. This is 1st January. 1st January means interest was paid on 31st December, only yesterday. And today is 1st January. So there is no question of interest accrued. There is no question of interest accrued. What is the last interest payment date? 31st December 2010. What is the transaction date? 1st January 11. So how much gap is there between these two dates? 0 date or 1 day. Ignore 1 day. 0 or 1 is ignorable. So since 0 or 1 is ignorable, I will write 0, 0, 0. So if interest accrued is 0, interest amount will also be 0. If interest accrued in month is 0, interest amount is 0. Therefore, this time 5800 will remain 5800. And in question also they have not mentioned whether X interest or cum interest. For this transaction, it does not matter only. It does not matter only. Okay. Come to next, sale. In the third line of the question, on 31st December 2010, debenture of the nominal value of 2000 was sold. Cum interest for 1900 rupees in the last column. Cum interest for 1900 rupees. So number of months interest accrue will be 1st January 2010 for entire 12 months, because the question says it was sold on cum interest basis, means the price includes interest accrued for 12 months. So calculate the interest on 2000 rupees. 2000 rupees into 9%. 2000 into 9% into 12 by 12 is 180. 180. 180 is interest. X interest price balancing figure. Do the reverse working. 1900 minus 180 is 1720. Is 1720. So this is my first working note 1. This will help me to pass the entry. Later on you will help me to pass the entry. Now write down everybody step 2. Interest received on investment. Everybody write down interest received on investment. Interest received on investment will be only on one date, 31/12/2010. 31/12/2010. Interest will be received for 12 months because interest is paid only once a year. And the face value on which you will receive the interest, see, opening balance we have face value 10,000. Question begins with first line. Company had 10,000 rupees opening balance, plus company purchased this 6,000 rupees investment, but company also sold investment of 2,000 rupees face value. Company also sold investment of 2,000 rupees face value. What about this other 6,000? This was purchased on 1st January. That is next day. So that will not be discussed right now. Opening 10,000 plus 6,000 minus 2,000, and that makes it 14,000 rupees. On 14,000 at 9% for 1 year. So that will give you 14,000 into 9% for 1 year. That will give you 1260. Check the answer. Is it 1260? Interest received 1,260. Anybody? Any query on interest received? 1,260 is right. Write down working note 3. Working note 3. Interest accrued on investment. Interest accrued on investment. There are two dates on which interest will accrue. One is your opening investment, 1/4/2010, and second is your closing investment. Opening investment is on 1/4/10. Closing investment is 31st March 2011. Draw the format. Due date, number of months, face value, interest at 9%. Face value interest at 9%. So write down on 1/4/2010, interest will accrue for 3 months. Which 3 months? January, February, March. January to March. Up to December interest was received. So January, February, March 3 months. Calculate 10,000 into 9% into 3 by 12. 10,000 into 9% into 3 by 12 is 225. It's 225. Then at the end of the year, see what is the value of your investment that you are holding. What is the face value of your investment you are holding? So you had originally purchased 10,000 opening balance plus, understand, this 6,000 plus this 6,000 and minus 2,000 plus 6,000 you purchased plus 6,000 you purchased minus 2,000 you sold. So at year end you are holding investment of 10 plus 6 minus 2, 20,000 rupees. 20,000 rupees. 20,000 is the closing face value of investment. Is right. Into 9% into 3 by 12. Into 9% into 3 by 12. Into 9% into 3 by 12, 450. 450 is right. 450 is right. 450 is right. Anybody, any query on this? 450 is right. Okay. Below this, you write down, below this, when step number 4 is profit or loss on sale of investment. Profit or loss on sale of investment. We have sold one investment. We have sold one investment. So first you write down sale value. Sale value you will always write X interest price. And how many quantity you have sold? 20 units sold. 20 units sold. On the screen, I will tell you. Come to this step number 1. You have sold here face value of 2000 divided by 100. 20 units you have sold at an X interest price of 1720. At an X interest price of 1720. So your sale value is 1720. Sale value is 1720. In bracket write down refer step 1 or working note 1. And point B, cost. Cost. Cost you will follow FIFO method. For cost calculation will follow FIFO. Now how do you calculate the cost? So first you understand FIFO. I hope all of you know the full form of FIFO. Let me check. What is full form of FIFO? Anybody, full form of FIFO? First in, first out. We have opening balance where we have face value 10,000. Then we purchased on 1st December 2010, face value 6,000. Then we purchased on 1st January 2011, face value 6,000. This you don't have to write. This you don't write. Only for understanding. And we have sold investment of face value 2000 rupees. So let us call it lot number A, lot number B, lot number C. Just I am asking you, if you have to sell this 20 unit, from which lot you will sell first? Will you sell it from opening balance first, or lot B or lot C? Tell me. First in, first out means I will first try to sell out of opening balance. That is called first in, first out. So I will use this lot. I will use this lot, the opening lot for selling. In opening lot, we have face value 10,000 rupees, but we are selling only 2,000 rupees. So, what will be the cost? What will be the cost? Please tell me what will be the cost? Question mark. Face value opening is 10,000. Its cost was 8,000 rupees. Starting line of the question. Face value 10,000, cost is 8,000. And I am selling out of opening lot. I am selling out of opening lot face value of 2000 only. So my proportionate cost will be 2000 into 8000 divided by 10,000. 2000 into 8000 cross multiply divide by 10,000. So that somebody rightly said 1600. Someone rightly said 1600, which means the cost of the investment sold was 1600 rupees. Kunal, Sakshi, Rajender are right. Lot A is right. So 1600 is the cost. Out of 10,000, I have only sold 2000. So the proportionate cost will be 1600. So point number C would be profit. Profit is 120 rupees A minus B. Profit is 120 rupees on sale of investment. Any query on this? Profit is 120. One more working note I will write. This I will call step number 5 or working note 5. Value of closing investment. Value of closing investment. Value of closing investment. Kumar Gaurav is right. Lucky Agarwal is right. Padamja right. Value of closing investment. So for that I have to calculate two things. A, cost. Cost will be calculated using FIFO. Cost will be calculated using FIFO. Right hand side rupees. Right hand side rupees. Then I will calculate market value and then whichever is lower. So on the screen one more time, dear student, one more time. Please help me. You have opening balance 10,000. Out of 10,000, 2,000 have been sold. Out of 10,000, 2,000 have been sold. So what is remaining out of this? What is remaining out of this? Out of opening balance, investment of the face value 8,000 is remaining, and the proportionate cost will be 8,000 divided by 10,000. Proportionate cost will be 8,000 divided by 10,000. Face value is 10,000, cost is 8,000. Face value is 8,000, so its proportionate cost will be 6400. Its proportionate cost will be 6400. Okay, this is your opening lot which is still unsold. Then point B, write down out of purchases. made on 1st December 2010, out of purchase made on 1st December 2010, you have purchased something on 1st December 2010 on the screen, first line, and its cost is 5,000 rupees. And its cost is 5,000 rupees. Then there is one more lot which is also purchased but not yet sold. Out of purchase made on 1st January 2011. That lot is also fully unsold. On the screen, there is 11 2011 5800 5800 purchased but not sold. So that is also lying with us. This inventory or this investment is also lying with us. Tell me the total of cost. Tell me the total of cost. 6400 plus 5000, 11400 plus 5800 is 17200. 17200. Very good. This is cost. Point number DB, write down. Fair value. Fair value will be how many units we are holding? 80 units out of opening lot. 80 units out of opening lot on the screen, and 60 two lots we have purchased. 80 plus 60 plus 60 in quantity. 80 quantity, 60 quantity, 60 quantity, and this you multiply by market price of debenture given in last three lines, 90 rupees. 90. Quantity wise we have 80 plus 60 plus 60, 200 into 90, that comes to 18,000. That comes to 18,000. Therefore, investment will be valued at lower of the two. Lower of the two, and that is rupees 17,200. That is 17,200. Investment, closing investment will be valued at 17,200, being the lower of the two. Being the lower of the two. Is it right now? Being the lower of the two. So I have now completed all working note associated with this problem. What you will do, go through them once. There are total 5 working notes I have prepared. First one was purchase and sale of investment. Second one was interest received on investment. Third was interest accrued on investment. Fourth one was profit or loss on sale of investment. And the fifth one now we prepared is the valuation of closing investment. So usually these 5 or 6 working notes we will require in most of the problems on debentures. In problems of debenture, these are the working notes we will require. If you have understood, say yes, and then I will complete the ledger in 2 minutes. Say yes. Now I am ready with all my working notes. Now I can complete the answer in 2 minutes. Okay? You will help me with the answer. First, we will write down date, opening date, 1st April 2010, to balance brought down. Question is in front of you. Face value is 10,000, quantity 100, and amount will be cost or fair value, whichever is lower. So cost 8,000 is lower. Then on 1/4/2010, to interest accrued in bracket working note 3, in bracket working note 3, you will go to working note 3. I will show you working note 3 on the screen. This figure at the top right hand corner on 1/4/2010, 225 had accrued. So 225 here. This way it saves lot of time. Now we have made two purchases. Entry of purchases on the debit side. First purchase was made on 1st December 10 to bank, working note 1. Face value was 6000. Number was 600. 60, sorry. Number is 60. Number is 60. Number is 60. And then amount will be X interest amount. I will show you again. The X interest amount is 5000 rupees and the interest is 495. So you will always write here X interest amount and here interest 1111 to bank, again working note 1. 6000 was face value, 60 was the quantity, and what was the X interest amount on the screen? Working note 1, 5800. Can you see 5800 in the center here? 5800, and the interest accrued was 0. Interest accrued was 0. This is now purchase entry. Come to credit side. First entry will pass for sale. 31st December 2010, buy bank, sale, working note 1, 2000 rupees face value, 20 quantity. And what about the amount? X interest amount. On the screen, sale entry. Can you see 1720 and 180? 1720 is the X interest sale value and 180 is the interest amount. So this 1720, write down here, and 180. Also write working note 1. Then on 31/12/10, buy bank, interest received. Buy bank, interest received. So you have to write here working note 2. Working note 2, you will find interest received. I will show you. Last item here, 1260. 1260. And this you will write in interest column 1260. When you sold the investment, there was a profit also which you have to record 31/12/10 to profit on sale of investment. That was working note 5. So can somebody tell me how much is the profit on sale of investment? We'll go to working note 5 and check. On the screen at the top, the profit on sale of investment was 120. The profit on sale of investment we have seen 120. So right, that is there. Then on 31st March 11, 31st March 11, by interest accrued, working note 3, working note 3. So I will check what is the interest accrued. Let me go to working note 3. Can you see at the top here 450 rupees? 450 rupees. So 450 is interest accrued at the end of the year. 450 is interest accrued at the end of the year. And then 31st March 11, buy balance carried down. This balance will be 20,000. You can check. This will be 200. And here I am going to write working note 5. This profit was working note 4, my mistake. Working note 5 is the value of closing investment, which you have to take it from working note 5. On the screen below, last line below, on the screen, last line below, you will find 17,200 there. That is the value of closing investment you have to put. 17,200 in bracket right below working note 5. In bracket write working note 5. Is it right now? Now on the debit side write down to P&L account 31st March 11. The balance in interest account, this interest account balance, we will transfer to P&L account. So who will tell me how much interest will be transferred to P&L account? Take this highlighted figure, credit side total minus debit side interest. That is the net interest income transferred to P&L account. That is the net interest income transferred to P&L account. Come on. Net interest income transferred to P&L account. One 80 plus 1260 plus 450 minus 225 minus 495. Any answer? 1170. 1170. Now we'll complete the ledger by taking the total. This is 22,000 total. This is 220. This is 18,920. And this is 1890. Copy the same item on the credit side. Kunal is right, Santi, Priya right, Suyash right, Chaurasia right, Sanket right. This answer is now over. This answer is now over. Yes, everybody is right now. Shankar Mahamuni is right. Sanket Landge is right. Copy the same total on the outer column. Just one more cross check you do. What is the cross check you are going to do? The total of amount column should also tally automatically. The total of this amount column, which I am highlighting in green color now, this should tally automatically. This should tally automatically. 18920. Just check, is it tallying automatically? The total of this amount column should tally automatically. If it telling 18920, amount column should tally automatically, then you have done right. Yes, if it is tallying automatically, we have done it right. Okay, this answer is over. We will go to one question number 2. Come to question number next. Sorry, 8, not 2. Question number 8. Quickly we'll do question number 8 now. Now you have understood the trick. Question number 8 quickly. Mr. Investor furnishes the following details regarding his holding in 6% government bond. Very important question. tick mark, and then it says uh, opening balance, face value 60,000, cost 59,000. 1310, 100 unit purchased, ex interest price 98. 1710, sold 200 ex interest out of the original holding at 100 rupees. Purchase 50 unit at 98 come interest. 111, sold 200 unit ex interest at 99 out of the original holding. Interest dates are 30th September and 31st March. This time two interest payment dates are there. Mr. Investor closes his books on 31st December. Mr. X closes his books on 31st of December. Show how the investment account as it would appear in his books. Investment account we have to prepare. Year ending date of Mr. Investor is 31st December, but the interest payment dates are 30th September and 31st March. Again, there is a gap of 3 months, so we will have interest accrued for 3 months in the opening also and in closing also. Which method they have asked us to follow? FIFO method. One more practice on FIFO method. So question is same. This is for extra practice on FIFO method. Please write down. Please draw the format, date. First write down the heading books of Mr. Investor. Books of Mr. Investor, investment account for the period from 1st January 10 to 31/12/10. The name of the security is 6%, little fast, government bonds. 6% government bond. Interest due dates. There are two interest payment in this problem, 31st March and 30th September. 31st March and 30th September. Face value, now check for face value. Figures are around 100 rupees, 98 rupees, 100 rupees, 98 rupees, 99. So all these prices given are 98, 99, 100. Can I assume face value is rupees 100 per debenture? Face value rupees 100 per bond. Will you get angry if I assume 100 rupees? Say yes or no. So let us draw the format fast. Let us draw the format fast. Same format. We can assume 100 rupees, no objection. Draw 20 lines. Kindly draw 20 lines. Kindly draw 20 lines. Is the format ready? Investment account format is ready? If yes, tell me. Then I can go to the working notes. In this question also, we will require 5 working notes. We will require 5 working notes. We will require 5 working notes. So format is ready. Everybody write down working note 1. Purchase and sale of investment. Purchase and sale of investment. Draw the same format. Date, interest accrued, interest accrued. Under that three columns, from to number of months, from to number of months, then write down face value, then write down x interest price, interest at the rate of 6% per annum, interest at the rate of 6% per annum. In this question, interest rate is 6%, and last column is come interest price. Last column is come interest price. There are two purchase and two sale transaction. Very clearly given in question, two purchase and two sale transaction. Purchase transaction was on 1st March 2010. Question is in front of you. Second line, 1st March 2010. And the interest due date is 30th September and 31st March. Which means, suppose this is my timeline, 30th September, then there is 1st March, then there is 31st March. So interest will accrue from 30th September of previous year to 1st March of this year. So 30th September to 1st March, the interest will accrue. I will write like this: 1st October 2009 to 1st March 2010. This is the period for which interest has accrued. So that is October, November, December, January, February. How many months do we have here? 5 months. Number of months 5. Face value 100 unit purchase means 100 into 100. 100 into 100, 10,000. Purchased at 98 rupees. 100 into 98. 100 into 98. 9,800. Calculate interest on 10,000 at 6% for 5 months. Interest on 10,000 rupees at 6% for 5 months. How much is that? Interest for 5 months is how much? 10,000, 6%, 5 months. That is 250. So your come interest price will be 10050. Another lot was purchased on fourth line 110 2010. And what are the interest payment date? 31st March and 30th September. That means interest accrued will be nil. Interest accrued will be nil because the interest payment date is 30th September and you are buying it on 1st of October. So only 1 day gap is there. Only 1 day gap is there. So it does not matter. For 1 day will not pay interest. It was purchased 50 unit. 50 units means write 50 into 100, 5,000. And it was purchased for 98. 50 into 98. Come interest. It does not matter come interest or x interest because there is no interest only. Question is wrongly drafted. It was purchased at 98 only because come interest does not make any difference here. So these are the two purchase transaction. Now we'll write down two sale transaction also. Two sale transaction in third line 17 2010 sold 200 units means 20,000. interest will accrue from 1st April 2010, because interest is paid on 31st March, to 1st July 2010. 1st April to 1st July. April, May, and June. Only 3 months we will take. April, May, June, only 3 months. So 20,000 into 6% into 3 by 12. That is 100 rupees. Yes. And what is the price at which it was sold? 200x interest out of original holding at 100 rupees. 100 into 200. So it was 20,000 rupees realized, x interest amount, plus 100. Sorry, plus how much? 300. Interest is 300. You are right. And this is 20,300. 20,300. One more purchase was made on 1/11/2010. One more sold 200 units. So 20,000. And interest will accrue from 30th September onwards. So I will write 1st October 10 to 1st November 10. That is hardly 1 month. So you will take 20,000 into 6% into 1 by 12. That is 100 rupees interest. And it was sold on X interest basis. It was sold on X interest basis. So 200 into 99. X interest amount is 19,800 plus 100 is 19,900. 19,900. Just first to check whether this working note is right. If that is right, then I can handle remaining working note easily. Is it right now? So all of you prepare working note number 2. Prepare working note number 2. Interest received on investment. Interest received on investment. Working note number 2 is interest received on investment. Format: due date, number of months, face value, interest at the rate of 6% per annum. Interest at the rate of 6% per annum. There are two due dates in our problem on which interest will be received. First is 31st March 2010. 31st March 2010, interest will be always received for 6 months. Question is, what is the face value of investment held on 31st March? So first you check opening balance. Opening balance we have face value 60,000. 60,000 we have opening balance, and plus 10,000 purchased on 1st March. 10,000 purchased on 1st March. Did any sale take place? The answer is no. So can I say interest will be received on 70,000 rupees? Interest will be received on 70,000 rupees for 6 months at 6%. So that is 2,100. And now on 30th September, again we have opening balance 60,000, plus we have purchased 10,000 investment on 1st March, and then we have sold this investment on 1st July. This 1,710 we have sold before this date, so that is minus 20,000. Other investment were purchased or sold later. Other investment were these two investment, 110 2010 and 11110 is after 30th September. So they will not be considered. So this is equal to 50,000. You are going to receive interest on 50,000 for 6 months at 6%, and that is 1500. This we will call step 2 or working note 2. Any query on step 1 and 2? Any query on step 1 and 2? If no, let us go to step 3 or working note 3, interest accrued on investment. Interest accrued on investment. Interest accrued on investment. Interest will accrue on 1st January at the beginning and 31st December, that is year end. Draw this format. Please draw the format: due date, number of months, face value, interest at the rate of 9% per annum. 1st January opening balance, we had an opening balance of 60,000 rupees, and interest will accrue for 3 months. Interest will accrue for 3 months. Which 3 months? From 1st October 2009 to 31st December 2009. If you want to write the period, interest have accrued for this period: October, November, December 2009. 60,000 into 6% into 3 by 12, 900 rupees. Very good. 900. And on 31st December, we'll have to check how many investment we are holding. This will also be 3 months, from 1/10/2010 to 31/12/2010. We are holding investment. Let us see, opening balance 60,000 plus on the screen we have purchased 10,000 face value. On the screen, this 10,000 we have purchased, this 5,000 we have purchased, and 2022 lots we have sold. And 2022 lots we have sold. So plus 5,000 minus 20,000 minus 20,000 is equal to, this is the face value of debenture held on year ending date, 60 plus 10 plus 5 minus 20 minus 20, 35,000. 35,000 into 6% into 3 by 12. 35,000 into 6% into 3 by 12 is 525. 525 is right. 525 is right. Okay. Up to this you have done? Yes. Now write down one working note number 4, that is profit or loss on sale of investment. Profit or loss on sale of investment. Profit or loss on sale of investment. First column write date of sale. Next column write sale value. Sale value. Then write down cost. Under cost write down source, and then write down calculation, and then write down profit. We are following FIFO method. For calculating profit, we will follow in this question FIFO method. Problem has prescribed FIFO method. Date of sale. There are two dates of sale. One is 1st July 2010. Now go to the working note 1. Can you see third line, 1st July 2001? You will take this X interest amount as sale value. You will take X interest amount as sale value 20,000. In bracket working note 1. If you want to write more, X interest amount. Now for cost, source will be opening balance. Source will be opening balance. Source will be opening balance because we are following FIFO. Now look at your question book. Opening balance given is 60,000 rupees face value and the cost is 59,000. And the cost is 59,000. We are selling investment of face value 20,000. What will be its proportionate cost? What will be its proportionate cost? So the answer is 20,000. The answer is 20,000. The answer is 20,000 into 20,000 into 59,000 divided by 60,000. 20,000 into 59,000 divided by 60,000. That is the cost. Anybody wants to answer? 19667. 19667. So what is the profit or loss? There is a profit of 333. Profit of 333. This is the first profit. Very good. Rajendra Pawar, Sakshi, Sonam, Suyash, Kunal, Somesh Kulkarni. There is one more sale transaction on 1/11/10. What was the sale value? I have to take the X interest amount on the screen, 19,800. 1/11/10, 19,800. I have an opening balance of 60. 20 gone, but still 20 remaining. So the source of this will also be opening balance. Opening balance is 60,000 and the calculation will again be the same. 20,000 into 59,000. Numbers are same. So answer will also be same. But the profit figure will be different now. The profit will be 133 only. The profit will be 133 only. This is the profit or loss on sale of investment. Done. One last working note 5. Working note 5, write down valuation of closing investment. Valuation of closing investment. Valuation of closing investment. Write down method FIFO. Method FIFO. Right hand side rupees. Right hand side rupees. First we will write A out of opening balance. Out of opening balance. Opening balance have 60,000. Opening balance of 60,000. We have sold 20 plus 20, 40,000. So therefore we still have 20,000 left. And again the proportionate calculation will be 20,000 into 59 by 60. 60 we had in the opening balance. 20 sold, 20 sold, 40 sold, 20 remaining. So the proportionate cost of this will be same 19667. Then out of purchases on, we have made two purchases. First March 2010, 9,800 ex interest amount. Just check it on the screen. 9800 on the screen here, ex interest amount, and 4900 the second lot, 11010. Out of purchases on 11010, that was 4,900. These two lots are not yet sold, fully unsold. Fully unsold. Fully unsold. So take the total of this. Take the total of that 19,667 plus 9800 plus 4900. So that comes to 34367. 34367. That is the value of closing investment. In this question, market price is not given. Market price on 31st December is not given. So this is our answer. Point D, value of closing investment. Market price is not given. Ignore. Market price is not given. Ignore. Okay. If market price was given, then we will check it. So now we are ready with all working notes. So you will give me the answer first so that I can complete the answer in 2 minutes. Okay. So we'll start with opening balance. 1st January 2010, to balance brought down, face value 60,000, quantity 600, amount 59,000 given in first line. 1st January 2010, to interest accrued, to interest accrued, to interest accrued. Working note number 3, go to working note number 3 and check. Working note number 3, check interest accrued. You will find in working note number 3 on the screen at the top 900 rupees here. 900 rupees is interest accrued. Then we'll write down purchases made on debit side. 1st March 10, to bank. Working note 1, you have purchased 10,000 rupees face value, given in question also. 100 units. 100 units. Then amount will be X interest amount. On the screen, amount is 9800. 9800, interest is 250. 9800, interest is 250. Please keep 2 lines blank and write 2 lines blank, 1st October 10. Keep 2 lines blank and write to bank. Again, working note 1, you purchased face value 5,000, 50 units, and it was purchased at on the screen for 4,900. It was purchased for 4,900 without interest. Without interest. So first we have written debit side. Now we will pass entry on 31st March 10 by bank interest received column. This you write down working note 2. Go to working note 2 on the screen below 2100. This 2100 is interest received. 2100 interest received. Then there is a sale transaction on 1st of July. 1st July 10 by bank sale. Working note 1. Face value sold is 20,000. Quantity sold 200. Quantity sold 200. But the amount I have to check it here. Amount is 20,000 ex interest and 300 rupees interest. So 20,000 and 300. Wait, there is a profit on sale also. There is a profit on sale also. So on the debit side, 1710 to profit on sale. In amount column, working note 4. Working note 4, profit on sale. Anybody, profit on sale, working note 4. On the screen at the top, 333. 333. This is the profit on sale of the first time when you sold. So you write down here 333. 333. Is it right now? Profit on sale 333 right here in amount column. In amount column. Then on 30th September 10 by bank interest received. Working note 2 again. Working note 2 again, last item. Interest received, last line on the screen. Working note 2, 1500 rupees. 1500 rupees. Then there is one sale transaction also on 1st November. 1st November 10 by bank sale. Working note 1. Working note 1. And you have sold investment with face value 20,000, quantity 200. Face value 20,000, quantity 200. Please tell me the amount which you will write here. So on the screen, this last item sold 19,800 and interest 100. This two figure 19,800 sale value and interest 100 rupees on that. So you will write down 19,800 and interest 100. Then we'll come to year end 31st December 10 by interest accrued. By interest accrued, write working note 3. Working note 3. By interest accrued, working note 3. On the screen at the top, working note 3 is interest accrued 525 at the end of the year. So 525 in the interest column, and then closing investment entry 31 12 10. We have not passed one entry for profit on sale on 111. So write down here 11110 to profit on sale. Working note 4. What was the profit on sale of the second investment? On the screen below here, profit on sale of that second investment is 133. So can I write 133 now? This question is lengthy, I can't help it. This has come in the exam. Now the last part, buy balance carried down, face value balancing figure. Face value balancing figure, please tell me, face value balancing figure 60,000 plus 10,000 plus 5,000 minus 20 minus 20. Face value balancing figure 35,000. So quantity would be 350. Quantity would be 350. And the amount we will get from working note 5, value of closing investment. Value of closing investment working note 5 on the screen below right side 34367. 34367. 34367. 34367. 34367. And one last item on debit side 31 12 10 to P&L account. To P&L account, interest balance will be transferred. Take on your calculator interest credit side total first. 2100 plus 300 plus 1500 plus 100 plus 525 minus 900 minus 250. Any answer for interest? Any answer for interest? 3375. Very good. Now tell me the total of face value column. 75,000. 750. 74166. 4525. Copy the same figure on the right side. There may be a difference of 1 rupee, and that is because of rounding off. There may be a difference of 1 rupee, that is because of rounding off. Don't worry. You can reduce the closing stock by 1 rupee here, 6 rupees. Then your total will tally. Is it right now? Has everybody done? Is there any query? This type of question comes for 8 marks approximately. It can be 6 also, 10 also. So the range is 4 to 10 marks. But this is much simpler compared to what we are going to solve in the next lecture. Now more difficulty will happen. Convertible debenture will also come, when debenture will suddenly convert into equity share, and from debenture you have to start equity accounting. So don't worry. Thank you very much, and enjoy your day. Bye bye.